These are the reasons why Rolex, a company worth nearly $100 billion, refuses to offer a single discount on any of their watches. While every other luxury brand caves to seasonal sales and promotional pricing, Rolex operates by completely different rules, and those rules have made it the most dominant force in the luxury watch industry. When you walk into an authorized Rolex dealer and ask for a discount, you will hear the same response every time. Dealers will say, "Rolex does not allow us to give discounts, or else we might lose our Rolex account." This is not just corporate policy, it is the foundation of a pricing strategy that has generated $10 billion in annual revenue and created waiting lists that stretch for years. The story begins with a German orphan named Hans Wilsdorf, who understood something about luxury that most brands still struggle with today. In 1905, Wilsdorf founded what would become Rolex with a revolutionary idea. The wristwatch could replace the pocket watch entirely, but here's what really mattered. He grasped that in luxury goods, price is not just a number, it is the product itself. Wilsdorf's masterstroke came in 1960, when he made a decision that would forever separate Rolex from every other luxury company on earth. Having no children or direct heirs, he transferred 100% ownership of Rolex to the Hans Wilsdorf Foundation, a private charitable trust. This move eliminated shareholders demanding quarterly profits and dividend payments. Unlike publicly traded competitors like Richemont or LVMH, Rolex answers to no one except the foundation's charitable mission. This unique ownership structure creates something extraordinary in the business world. Rolex operates without a single annual report, no earnings calls, no quarterly targets to hit, and no shareholders to placate. The foundation has one mandate: make Rolex better and support charitable causes. They donate between 100 and 150 million Swiss francs annually to various projects, including funding the Hans Wilsdorf Bridge in Geneva and supporting educational initiatives. Without the pressure to maximize short-term profits, Rolex can focus on what economists call Veblen goods, products where demand actually increases with price. This phenomenon completely reverses normal economic behavior. While regular products see demand drop as prices rise, Veblen goods become more desirable precisely because they are expensive. The higher price signals exclusivity, status, and quality that cannot be obtained any other way. Patrick Thomas, former CEO of Hermes, perfectly captured the luxury paradox. He said, "The luxury industry is built on a paradox. The more desirable the brand becomes, the more it sells. But the more it sells, the less desirable it becomes." Rolex solved this paradox through controlled scarcity and unwavering price discipline. The numbers tell the story of this strategy's effectiveness. In 2024, Rolex held approximately 32% of the luxury watch market, with revenues of 10.58 billion Swiss francs from just 1.18 million watches. That's an average price of nearly $13,000 per watch. They outsell the next 5 biggest luxury watch brands combined, yet they actually reduced production in 2024 compared to 2023. This production control is not accidental. While Rolex has increased manufacturing capacity over recent years, from 1.05 million watches in 2021 to 1.24 million in 2023, they maintain strict limits. CEO Jean-Frédéric Dufour deliberately avoided dramatic production increases even during the boom years of 2021 and 2022. Instead, Rolex reduced output to 1.18 million pieces in 2024, demonstrating their commitment to scarcity over volume. The waiting list system exemplifies this strategy in action. Want a stainless steel Daytona with the legendary Panda dial? Expect to wait 2 to 8 years if you get the call at all. A Submariner date in steel requires 1 to 3 years of patience. Many of the most sought-after models never make it to display cases, instead reserved for VIP clients and longtime collectors. Showroom models often bear exhibition-only labels, meaning you can look, but you cannot buy. These waiting lists aren't just marketing theater, they're economic engines. The secondary market reveals the true power of Rolex's no discount policy. As of July 2024, Rolex watches traded at an average of 19.6% above retail price in the secondary market. Popular models often sell for double or triple their original retail cost. Paul Newman's personal Daytona, originally priced around $200 in 1963, sold for $17.75 million in 2017, a gain that makes any stock market investment look insignificant. The Rolex Certified Pre-Owned program, launched in 2022, represents the company's move to capture some of this secondary market value. Rather than allowing independent dealers to profit from pre-owned sales, Rolex now certifies and sells their own used watches through authorized dealers. This gives them control over pricing even in the secondary market, while maintaining their no discount philosophy on new timepieces. Research shows that 82% of ultra-luxury products selling for over $15,000 never offer discounts. Rolex sits at the center of this exclusive club, understanding that discounting luxury goods creates a psychological shift that destroys perceived value. When a luxury brand offers sales, customers begin to question whether the original price was justified. They start waiting for the next discount rather than buying at full price. As one luxury marketing expert noted, when you discount a luxury product, you dilute its performance. Price becomes the enemy, because in luxury, price is the product. Rolex treats this principle as gospel, never wavering even during economic downturns or competitive pressure. The recent Bucherer acquisition in 2023 demonstrates Rolex's commitment to controlling every aspect of their distribution chain. By purchasing the largest network of luxury watch retailers for an estimated 3 billion Swiss francs, Rolex now controls not just manufacturing, but retail distribution. They immediately shut down Karl F. Bucherer, the historic watch brand that came with the acquisition, showing they are willing to eliminate competition to maintain their market position. Even Rolex's price increases follow a calculated strategy. In 2024, they implemented modest increases of 4 to 6%, while 2025 saw minimal increases of 1 to 1.5% for steel models, but significant increases of 8 to 11% for gold watches, largely due to rising gold prices. These increases always maintain the brand's premium positioning while ensuring customers never expect discounts. The foundation structure provides another crucial advantage: tax efficiency. As a registered Swiss charitable foundation, the Hans Wilsdorf Foundation pays lower tax rates than traditional corporations. This allows more resources to flow back into manufacturing, research and development, and maintaining the highest quality standards, all while funding substantial charitable work. This system creates a virtuous cycle. Higher prices fund better manufacturing, which then justifies higher prices, which creates more exclusivity, which increases demand, which supports even higher prices. Unlike publicly traded luxury companies that must balance growth with exclusivity to satisfy investors, Rolex can optimize purely for long-term brand strength. The strategy extends beyond just refusing discounts. Rolex deliberately limits which models they produce in large quantities, shifting manufacturing between collections to create artificial scarcity. A popular steel sports watch may be nearly impossible to obtain, while a gold dress watch sits readily available. This keeps customers engaged with the brand across multiple product lines, while maintaining the perception that any Rolex is difficult to acquire. Current developments show no signs of this strategy changing. The new billion-franc factory in Boulay, Switzerland, opening in 2029, will employ 2,000 workers, but will still maintain controlled production levels. Rolex is expanding capacity to meet some demand, while ensuring they never flood the market with readily available watches. The Hans Wilsdorf Foundation ownership structure means this pricing philosophy will likely continue indefinitely. There is no private equity firm pushing to maximize returns, no public shareholders demanding growth, and no succession issues that might force strategic changes. The foundation exists to perpetuate Wilsdorf's vision of Rolex as the ultimate luxury timepiece. In an industry where brands constantly chase trends and compete on price, Rolex stands alone as proof that refusing to discount does not just preserve brand value, it creates exponential returns that compound over decades. Their $10 billion in annual revenue from just over 1 million watches demonstrates that in luxury, less really is more. By never offering discounts, Rolex has not just built a watch company, they have created a financial institution where time literally equals money, and both only appreciate in value.